Hi, my name is Reed Silverne. Name of the show is Fed Pride. Reason it's called Fed Pride is because I'm a federal worker, retired, and proud of it. Today for me, it's February 6th. It's a Friday. For you, it's Sunday, the 8th of February, or the following Tuesday, the 10th of February. Or you could be watching this months and months from now, looking back into a window to the past. Again, everything I say is probably going to be obsolete. I'm going to talk a little bit about the bailout bill. Right now, in Friday, the bailout bill is before the Senate, and there's talk about trying to force a vote today. I don't know whether that would pass or not. Again, the Republicans are up in arms because there's not enough tax cuts. And the House bill, which passed a few days ago, was $819 billion, $275 billion in tax cuts, $500 tax cut to each individual, $1,000 to each couple, and all kinds of goodies to tax cuts to seniors, and another $200 or $250 billion of various kinds of infrastructure improvements. I think infrastructure per se is about $80 to $100 billion in it, but also giant subsidies to the states so that in order to balance the budget, the states don't have to lay off half of the employees of the state, and also reduce their infrastructure and their support, which could hurt the economies of the various states. So there's about $80 billion to the states. There was all kinds of goodies to all kinds of people. Another big thing was 33 weeks of uninterrupted unemployment, and also a subsidy to COBRA. COBRA is subsidizing Medicare, or no, subsidizing medical insurance for people who are laid off. There is a chance for a person who's laid off to be able to pay into his own medical insurance that he got through his last job. However, he has to pay 100%, and let's say it's a 40 to 60 split, and if somebody is paying $300, he would have to pay more like $750, and of course the person is unemployed. So not that many people take advantage of COBRA, even though that's the closest thing you're going to get to affordable health care and health insurance for the unemployed. So the government is going to be putting a number of billions of dollars, I think it was 20 or 30, I don't have the figures in front of me, to support COBRA. And then also a big subsidy, I think 40 or 50 billion dollars to take over the state, or part of the state input or the state share of Medicaid, which is health insurance for poor people, with the idea that if there's a tremendous recession, there's going to be more poor people to support. And that will happen, and that is already happening. So what's going on? Well, the big story of the day, or at least of Friday, of course you're not watching it on Friday, is they just announced the January unemployment figures. January unemployment figures are terrible. An increase of unemployment, an actual increase in new filings to the unemployment of 598,000 people. That's almost just under 600,000 jobs absolutely lost. They have redone and restructured the unemployment figures all the way back to the beginning of the recession, which a few months ago was, I think after the election, was restructured back to December of 2007. So this recession that we're in today started in December of 2007, and when unemployment was about 4.7%. Unemployment has just jumped in January from 7.2% to 7.6%, the worst since 1993. Almost every prediction says that unemployment is going to rise to at least 9% by the end of the year, and possibly 10% in 2010. So basically, we are looking at the worst recession in the post-Depression history, the worst recession in memory has mostly been the 1980-81 recession. At the very, very beginning of the Reagan administration, there was a terrible recession where unemployment went above 10%. And at the same time, we had terrible inflation. It was called stagflation at the time. And it took a terrible recession in order to cool the economy down, in order to get rid of the wave of inflation that had occurred after the Vietnam War and during the Carter administration. So actually, people remember Reagan very fondly as the president that basically won the Cold War. But the first couple of years of President Reagan's reign were just awful because of this terrible, terrible recession, which almost paralyzed the economy during those couple of years. Through tax cuts, through this, through that, and various methods, America managed to dig itself out of that recession, go into the Reagan military boom, and voila, we had a relatively good economy. And at the end of the 80s, we managed to get out of recession into a good economy, and at the same time, outspend, outwit the Soviet Union, and the Soviet Union fell, the wall fell the year after Reagan left in 1989. Of course, that was also the beginning of the great S&L recession, which led to a series of recessions toward the beginning of Clinton's era, and that's why this is the worst presently unemployment since 1993, which was the recession in the first term of the Clinton administration. So it seems these two-term presidential reigns seem to start off with recessions, and of course Obama's is starting off with probably what I call a cross between a depression and a recession, which I call a decession. I think this one's so bad we need a new euphemism. It's not a recession in the traditional sense. Fortunately, we managed to avoid an outright credit freeze-up, even though the commercial paper market fell a few months ago. And when it did, we would have been in a situation where no business could get a short-term loan to pay its payroll. No business could get a short-term loan to buy their inventory, and that's how most retail works. And we would have had businesses and the entire system freeze up a few months ago, which didn't happen. But what is happening is a terrible, terrible recession. What is the Obama administration solution? The Obama administration solution is pushing and succeeding in getting the stimulus package, and they've already gotten approved the second half of the TARP, which is the toxic asset, I called it the rescue plan, but I think it's a recovery plan. And basically that's the bailout of the banks in order to get the financial system working. Everybody is saying the first half of the TARP, $375 billion, $10 billion to Goldman Sachs, a bunch of people who issued derivatives that proved to be fraudulent. $10 billion to Morgan Stanley, billions to each of the banks that collapsed. Bank of America was given $25 billion, but some of that was to rescue and buy out Merrill Lynch, which was another investment bank that had all kinds of terrible derivatives and who knows what else. Another $152 billion just went alone, and which is not apparently part of the TARP money, to bail out AIG. AIG was one of the, and probably the world's master of credit default swaps, which are kind of like little individual insurance policies. If you own a bond and it's at 6%, you're afraid that the company whose bond you own is going to default. You buy a credit default swap, you pay basically a set of premiums, and if you lose the company goes under and it defaults on its bond, you still get your money back because of the default, credit default swap, or CDS. Catch to those was that AIG, which was the master of that industry at that time, had drastically underpriced these credit default swaps because they thought that they could sell them later, and they did. Who in a right mind would buy a credit default swap that protects a specific person with a specific bond with a specific problem? What was the resale market supposed to be doing? And because of this whole thing, they ended up vastly underpricing these credit default swaps. And when the default rates went up, when certain companies defaulted, when the mortgage, because they sold these against these mortgage pools and the derivatives, when the mortgage default rate started to go up or the foreclosure rate started to go up, basically there was no money available to pay off these, quote, insurance policies when they came due. And what was the result? The result was AIG was against the wall. When Lehman Brothers collapsed and was allowed to collapse through a stupid decision, I have to say, outrightly stupid decision of Paulson, the last Treasury Secretary, who wanted to show, after bailing out Bear Stearns, saving the economy, he wanted to show that the free market allows people to lose. Well, what he didn't realize is that Lehman Brothers, which is only the fourth largest of these investment banks, had billions and billions and billions of dollars in derivatives that were linked in and based on credit default swaps. When they went down, AIG followed immediately. And if AIG had gone down, the backup for almost all the derivatives in the entire world, the basic insurance against default from almost the entire bond industry, corporate bonds, muni bonds, you name it, would have just collapsed. And it virtually did collapse because the federal government virtually had to take it over even then. But if they had allowed everybody to say, we have lost everything that was guaranteed by credit default swaps by AIG, the world's largest issuer of credit default swaps, banks, cities, corporations, all their bonds would have been de-recognized, would have been rendered worthless, and there would have been a run on everything. And even as that was even threatened, the LIBOR rate went from, the overnight LIBOR rate went up to 4%, which is the rate that a bank will lend to another bank. It is now at 0.3%. So it went basically up 10 times to the point where banks could not loan to each other or were afraid to loan to each other overnight. Whenever you go to an ATM machine at Wells Fargo, if you have an account at Bank of America, basically you take out $400. Bank of America loans Wells Fargo, or Wells Fargo, because you're at their ATM machine, that's just loaned Bank of America the $400 they just gave you, and Wells Fargo has to pay an overnight bank loan rate. And when it does, that's supposedly covered by your little quarter fee or however much it is, so, or dollar fee or whatever it is. So if it doesn't happen and that costs them $4 or $16 or $15, obviously the ATM machine system is not going to work. People are not going to recognize each other's accounts, and it could have been a disaster. That disaster was avoided, and it was partially avoided because the bailout, which was the TARP, was rushed through, and $375 billion was authorized to spend and just thrown out there. And the LIBOR rate went from 4% to 0.3, where it is. It's been even below, I think, down to 0.2% at one point. And basically, the financial system, in other words, the financial system as it relates to you, your ability to go to the ATM machine, get money out, that has survived. If you go down to the store, Circuit City has gone out of business. But if you go down to the mall, there's a lot of stores that are still in business. They have inventory, and you're going to be able to buy it. If this thing had gone the way it could have, back in August, September, and October of 2008, we would have been in a situation where only totally self-financing stores would have any inventory at all, which means that you either go to Walmart or everything else is closed. So we came that close from a total financial freeze up and depression, a real depression. However, just because we avoided a real depression doesn't mean we didn't avoid a super recession, a decession. And that is what we are getting now. Last month, hundreds of thousands of jobs were lost. This month, 598,000 jobs were lost. From the December 2007, 3.6 million jobs were lost. And this is just continuing and even accelerating. We haven't even counted the furloughs from the car makers, and even the Japanese car makers are going to be furloughing people. Things are going to be very, very serious within the next couple months. So the solution, according to Obama, is let's just spend a lot of money and hire a bunch of companies and go rebuild all the roads and build new bridges and so on and so forth, and basically have a private, through government contracting version of the Depression CCC, or basically in the beginning of the 1980s, Japan, whose real estate was valued at 5 times the value. Just the real estate in Tokyo was valued at 5 times the value of all U.S. real estate everywhere, which is ridiculous, of course. That collapsed, and it almost took down the second largest economy in the world, which is Japan. And Japan basically ran their interest rate down to zero, which is what we have done with our Federal Reserve, and it still didn't work. So what they did is they basically went into draft economy and built and built and built and built and built in order just to put people back to work, and borrowed and built and borrowed and built and borrowed and built. So that's basically what they did. So that's kind of half of, or really a quarter of the stimulus bill. Another quarter, or half of the, or about 30% of the stimulus bill is let's have tax cuts and basically give people money so that they can go out and spend it. $1,000 for every couple. Another big subsidy, and I don't know the exact dollar amount, for every senior. And if people are laid off, let's make sure they have some health insurance. Let's expand the S-chip, which is basically saying if you're poor or lower middle class, above poor, so if you can't qualify for Medicaid, at least we'll insure your kids, so that if you have a problem, maybe you can just wheel your husband out who needs kidney dialysis to die on the street, but at least you won't have to worry about your kids. So that's it. And then subsidies for COBRA, and a vast increase of unemployment to the point where you can be unemployed for 33 months, week after week after week, never being able to get a job. And you'll be able to take virtually 33 weeks is about 7-8 months of unemployment. And hopefully you'll get back on your feet by then, at least get a part-time job to be underemployed. So that's basically what's happening there. How much is this rescue costing? I was talking last week about the problems with an incredible amount of cash being printed and put out into the economy. This is not to say I don't support it, and I'm sure there's a lot of Republicans that don't, but basically the velocity of money, and you print a dollar, the number of times that it gets spent, and then somebody makes that dollar and then respends it and then goes down to McDonald's and spends it again, and McDonald's gives it to their $7 an hour minimum wage person, and then they spend it again, and so on and so forth. 6 to 7 times. That is not happening. And because the government is the cash of last resort, and has already taken over Fannie Mae and Fannie Mac and what has survived of the mortgage industry. Basically, the government has had to print money, but it's been hard to tell how much money got printed. How many bailouts were there? There were so many. There's a term auction facility, which I believe it's either that or the discount window, which the term auction facility, I believe, it's called TAF, was when the government took over the short-term commercial paper loans, allocated $2.1 trillion, every single dollar of that spent in order so that stores can buy inventory, so that companies can make things, keep people employed to sell to stores, and people and small business and middle-sized business can borrow money short-term for their payroll, which is how they stay in business. Then there was the first economic stimulus, which was $168 billion during the Bush administration. Bear Stearns cost us $29 billion, $25.8 was spent. The discount window was expanded, which is basically where the Fed said, come in and borrow from us at almost zero interest rate, and then lend it out. Basically, the discount window, $97 billion has been handed out there. Student loan guarantees, allocated $9 billion. We don't know how much was spent. Foreign exchange dollar swaps. At one point, the dollar swap industry, which is, I have a transaction, I'm going to buy steel from Europe, $1 million worth of steel. If the price of steel goes up or down, or the euro goes up or down, I need to guarantee that what I have spent is what I'm going to get. And basically, a foreign dollar swap is another insurance policy very similar to a credit default swap, where Bear Stearns or somebody else sells me a little policy. I pay $1,000 a month to guarantee that a currency shift won't destroy my transaction and make me unable to receive the goods that I've bought. You're not going to believe it. $465.7 billion spent shoring up the dollar, the foreign exchange dollar swap. This is a problem that I wasn't even aware of, and I've been following this kind of thing. 460, almost $500 billion. FHA housing rescue, $20 billion spent, but $320 billion were allocated. Auto industry efficiency loans, $25 billion. The TARP itself, $700 billion. $296 billion as of February 5th or January 31st has already been spent to bail out the banks in the TARP. AIG, when I was just talking about $40 billion out the window in order to protect the credit default swaps. Bank capital investments, $250 billion were allocated for it, $195 billion going to the banks. That's what I was talking about before. Citigroup Capital got $20 billion. TALF lost provisions, $20 billion, but none spent yet. The auto industry bailout, $20.9 billion spent. When you add them all together, let's see if there's any other big ones. Commercial paper funding facility, that's what I was talking about. $1.4 trillion allocated, of which only $250 billion was spent. So the term auction was a different thing. AIG, $124 billion spent. Some of these are just unbelievable. And then there's Citigroup loan loss backstop, which is $300 billion in case Citigroup defaults on all of its toxic assets. You add the whole thing together, $9.1 trillion were allocated and $3.6 trillion were already spent. You have to take into account that in previous years, the budget of the entire United States government was under $2 trillion. We're talking about $3.6 trillion of printed money handed out that you don't see in the M1, the M2, the normal money supply figures. So if this thing goes back to normal, it's very possible that the velocity of money goes back to normal, we could have a tremendous oversupply of money and some inflation. My name is Reed Silverne. Thank you for watching my show. I really appreciate it.